and gains, where the only thing spicier than the inflation is our sarcasm. I'm your host, Ben the Bull, aka Max Pitts, and no, I don't have a crystal ball, just an unhealthy obsession with market chaos and giving you guys daily updates on YouTube, Substack, and Twitter. Anyways, this week we've got a trade war truce-ish, a Fed that's gone full ghost mode, and big tech finally waking up from its 2025 coma so far. So grab your coffee, turn off CNBC, and let's decode this week's market circus. So to kick things off, apparently pausing a trade war isn't enough to send the markets into euphoria. Who knew? Last week, we saw the S&P 500 rise about 5.3%. We saw the Nasdaq rise about 7.2%. That's not a rally, that's cardio. And the Dow Jones saw 3.4%. Still dragging, but hey, it gets an A for effort. It's like that fat kid who keeps trying to play sports. You know, you just appreciate the effort at the end of the day. Trump says tariffs are paused with China for 90 days. Wall Street said, cool, let's party, baby. But here's the kicker. No actual deals are signed, just a glorified coffee break in the trade war. The quote of the week last week was, I think we still need to be a little cautious. Every strategist ever covering their behinds. Spoiler, nothing is guaranteed, by the way. We could be one Truth Social post away from a full-blown chaos, riot, orgy again. Now, let's go talk about your favorite F word, the Fed. Rate cuts, not so fast. Wall Street's new favorite month for rate cut is July, not June. Why? Because apparently we're all pretending inflation is solved thanks to tariffs being temporarily less insane. Jerome Powell's energy this week, patient grandpa at Costco waiting for a sale on peanut butter. Granted, he is a grandpa, so pretty accurate description. And spoiler alert, Bank of America says the Fed may not cut at all in 2025. So it looks like we're going to get those rumors coming again. Jesus Christ, where they're like, we're not going to cut rates the whole year. Like, shut up. But yep, you read that right. No cuts, just pure vibes in this diabolical market that is scalping people like it's back in the Native American times. But hey, we'll hear from 9 Fed speakers this week. So expect plenty of Fed speakers. Bingo. Uncertainty, data dependent, robust, and my favorite, moderating inflation. So maybe do a shot every time you hear one of those when the Fed speaker speaks. And let's go ahead and talk about how the lag 7 is back to being the magnificent 7, or as they've been called lately, the mediocre middlemen. In Q1, these tech darlings, Apple, Google, Amazon, Microsoft, Meta, Tesla, Nvidia, dragged the S&P 500 down. Without them, the S&P would have been up 2%. Oof. But wait, the prodigal son returns. Nvidia is up 30% in a month. Tesla's also up 30% in a month. And Microsoft is 20% up on vibes and AI. Goldman even boosted its S&P target to 6,100. Thank you, AI juice. The long and the short of it is tech is back, baby, until the next earnings disaster or regulatory scare, of course. Now, what are we exactly watching this week? That's the big question on everybody's mind. Well, on the economic data front, Monday we have leading index, yay? Who knows? Tuesday we have Philly Fed non-manufacturing. You weren't watching it before, but you will now. Wednesday, mortgage apps, housing market hopium, basically. Thursday, we have jobless claims plus PMIs, which equals macro soup. And Friday, we have new home sales and building permits. Earnings that might move the needles this week. We have PANW, cybersecurity vibes. We have Target with inflation check at the checkout lane. Home Depot, home improvement, or home regress. And we have Workday. Will HR software save us all? The calendar's light, but don't sleep on random catalysts. Remember, volatility loves a vacuum. So here's where we get real. Inflation hiding in plain sight. Tariffs, pause, not killed. The Fed is in therapy currently, and the tech is rebounding, and retail is absolutely crying, with Walmart literally saying, we can't afford these tariffs, and Trump just said, suck it up and absorb it. That's a wild statement, by the way. But yet, markets are rallying like the Fed just handed out free stimmy checks again, which, by the way, I'm still waiting on my $5,000 stimulus check. So where is it? Anyways, translation, sentiment is up. Real risks are buried. under the rug, and the bulls are back on X/Twitter posting rocket emojis like it's 2021 all over again. So annoying. Now, let's go ahead and wrap up this joke of a circus. Stocks are melting up, the Fed is stalling, tariff drama is half baked at this point, tech is acting brand new, and everyone's pretending the soft landing is absolutely a sure thing when it was a sure thing last year too, apparently, and look at how that turned out. Will this last, or is this just the calm before another tweet storm? Comment below. Are we heading into the new AI bull market, or is this just a tariff-induced sugar high? And don't forget to smash that like button, domestically abuse that subscribe for flow and fire every week, and make sure to punch and check out our Substack at Trades and Gains with the link below. See you next week, legends. Stay smart, stay spicy, and we'll be back for a daily market recap on Monday because we do this daily, cuz.